Welcome back to The Explainer. Today we're putting telehealth company LifeMD under the microscope, giving it a full financial checkup. We're going to dive right into their latest quarterly report to see just how healthy this business really is.
And to get our diagnosis, we're going straight to the source. Now here's the deal. This whole breakdown is focused exclusively on the prepared opening remarks from LifeMD's Chief Financial Officer, Mark Benethon. So no CEO talk, no Q&A session, just the hard numbers and the story from the person who's in charge of the money.
Well, the CFO's report, it really gives us a super clear picture of the company's vital signs and, what its prognosis is for the future. Okay, let's just start there. That is a really bold statement from a CFO. The strongest in the company's history. So what's backing it up? Let's unpack the numbers and see if they actually support this very, very confident diagnosis.
First things first, let's just look at the top-line results, the ones that paint that overall picture of how the quarter went. And right off the bat, we see a very healthy sign. The core telehealth business, the heart of the company, grew its revenue by 18% compared to this exact same time last year. That's a pretty powerful start.
But here's what's really interesting. It wasn't just growth for growth's sake, it was profitable growth. The company's adjusted EBITDA, which is a great way of looking at profitability from their main operations, grew even faster at 30%. So that tells us that LifeMD isn't just getting bigger, it's getting smarter and way more efficient.
And this slide, wow, it really lays out the financial housekeeping the company did this quarter. I mean, they sold off a business that wasn't core to their mission, they wiped out all of their debt, and they stacked up a really solid cash reserve. This gives them just a ton of freedom to invest in the future without having to worry about loan payments.
Okay, so that's the cleanup. Now let's move on and see how this all builds into a story by charting out some of the key year-over-year growth metrics.
Yeah, this chart pretty much says it all, doesn't it? We're seeing solid double-digit increases all the way across the board. Total revenue, telehealth revenue, and, this one's crucial, the number of active subscribers. That's really the lifeblood for a business like this.
We're talking over 310,000 active users. And just so you know, that number isn't just for show. It's a testament to a growing community of customers who are actively choosing LifeMD for their healthcare month in and month out.
All right, so we've seen the growth. Now let's get into the nitty-gritty. Let's really examine the specific numbers, the financial vitals, if you will, for the third quarter.
Okay, here's a little snapshot of the key figures. Revenue is up, gross profit looks really strong. But importantly, look at the net loss. The company is actually losing less money than it was a year ago. Now, you combine that with the increase in that adjusted EBITDA we talked about, and it really shows they are on a firm path toward consistent profitability.
Now, one number that did shift a bit was gross margin. It's a metric that basically tells you how much profit the company makes on each dollar of sales before you factor in other expenses. So let's just quickly define what that means before we look at the details of what happened.
So the CFO pointed out that the gross margin for their telehealth business dipped just a little bit. But, and this is the important part, he was super clear that this wasn't because their products suddenly became less profitable. Nope. Instead, he said it was due to a revenue mix shift, which is just a fancy way of saying that the blend of stuff customers were buying this quarter was just different than last year. Maybe they leaned more towards a service with a slightly lower but still really healthy margin.
Okay, so Q3 is in the rearview mirror. What does the company leadership see on the horizon? This is their financial forecast, or as they call it in the business, their guidance.
For the last quarter of the year, now that they've slimmed down by selling work simply, LifeMD is forecasting some really strong results from its core telehealth business. You can see revenue is expected to land somewhere between $45 and $46 million.
And when you zoom out and look at the whole year, the forecast is even more impressive. They expect total revenue to be right around $192 million. And that represents a pretty significant 24% jump from 2024. And get this, the company is projecting a massive 254% increase in their full-year adjusted EBITDA. I mean, that number really drives home their focus on not just growing bigger, but growing profitably. They're turning that top-line growth into real bottom-line results. So the diagnosis is in. LifeMD is in really strong financial health. It's got a clean balance sheet, a clear path to profitable growth. But, as its business evolves, the key question becomes, how are they going to use this financial strength to stay ahead in what is an incredibly competitive telehealth market? That's the story we're all going to be watching as we head into 2026.